Friday at 12:30 p.m. only on Bloomberg Quint.
Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's a subdued day of trade for the markets as currency tensions continue to spook global markets. In line with Asian peers, the rupee slumped to fresh record lows today. The currency is also the worst performer in Asia. HDFC Bank Deputy MD Paresh Suktankar resigned from his post over the weekend. Management said that the resignation will not affect the day-to-day functioning of the lender. And Tata Steel is the only Nifty company to report numbers today. High realizations may offset high coking coal cost in the first quarter.
Well, we'll get to know about it, I think, post-market hours from Tata Steel. We'll wait and watch for that. What about the markets, though? I must say, we've charted a much better course than what people would have earlier anticipated, what I had particularly thought as well, because the Nifty is not trading at the lowest point of the day. I would have thought that the chart would have looked inverse, but it's not quite that. And this is despite the Nifty Bank being down about 1%. That too, by the way, has not really shown a really big crack, about a 300-odd point gash, nothing too much, and staying down at that 1% odd level. Before I get to what's working on the Nifty and which is helping the index do better than the Nifty Bank, just bring up what the mid caps and the small caps are doing, because the broader market breadth, and the small cap index when it started off was at these levels and it stayed at these levels, and the mid cap index started off 0.8% lower. It's actually recovered a lot of lost ground. So the market breadth has actually improved during the course of the day, which is the highlight really. Europe has started off marginally weak, nothing too dramatic, but marginally weak in the session today, about 0.5% to 0.25%. So the Turkish crisis, fears of contagion are not really spreading across the markets. One more day or one more event that has been digested well by the bulls. Bring up the heat map, and I'll only dwell on the heat map today, maybe a couple of other trends, but the heat map looks slightly better than what it was looking at the start of the trading day. Yes, commodity stocks still under pressure, so the Vedantas and the Hindalcos are down. HP, BP, RC are looking soft, but the heavyweights are not reacting very poorly. HDFC Bank, for example, doesn't have a gash which is really deep, just about 1.5%, and it stayed that way. Right here at the bottom of the screen is HDFC Bank. And on the gaining side, you have stocks like GAIL, Grasim, Coal India, a result reaction to that, and the IT pack, because of the rupee depreciation, looking slightly okay for itself today. Almost all the names piling in some bit of gains. What about specific stocks at the mid cap and the small cap end of the market? Just before I hand it over to Sumeet, mark a couple of trends. Firstly, earnings reactions, Apollo Hospitals, Sheela Foam, UBL in particular, some very strong commentary by the management. Nothing dramatic, but strong confidence expressed for the rest of the year. That stock is up 7%, and the other two too reacting in the session today. Apollo Hospitals up about 14% in trade. Besides this, and besides the results reactions, we've had stocks which are trading weak and trading around the 52-week lows, which include a Reddington, which include a McLeod Russell, and a Canfin Homes, which is down about a couple of percentage points. Remember, housing finance companies haven't really had a really good 2018, to be honest. So there's a bit of a valuation pullback that's happened in that pocket as well. But, and then, of course, some other losers include Bajaj Electrical's unfortunate demise of the managing director. TNPL is down. India Cements corrects further, I think trading close to lows as well. But what about the more liquid universe, Navneet? I don't know if India Cements features in your list or no, but how's the overall universe looking like in the derivative space?
Well, there is some traction definitely seen on back of numbers for a couple of stock futures in today's trading session. But let me first address the Nifty and Bank Nifty futures. As Neeraj was highlighting, definitely looking at Asian screen in the morning, you would have thought that the correction would have been steeper, but not really actually. We're still hovering around the mark of 11,380. If you look at the futures too, no major build-up seen, but the premium has doubled from Friday's closing, and also the Bank Nifty premium has gone up to almost 90 points. In fact, some long unwinding seen for Bank Nifty futures as the open interest is down nearly 2%. As the markets are trading in the negative territory, you've got the volatility which is inched higher. So that's one sign actually in today's trade, because it's after a while that you've seen India India, VIX surging almost 3 to 4% in trade. 13.4 is the current level. In terms of option strikes, surprisingly in the morning when we started, there was some put unwinding which was seen, which was not looking that great, because with markets falling, we were thinking that put writers are running for cover. But in the intraday session, actually the trend seems to be changing, because now if I look at the options chain, the 11,400 put has added open interest. Simultaneously also the 11,300 put, 11,200 put strike, all of them currently are witnessing open interest addition. That's telling you that in the intraday session, the positions definitely have changed, and there is more addition which has come in on the put side, but definitely more action on the call side seen. So 11,400 has seen 5 lakh shares being added, and the 11,500 call strike continues to sit with maximum open interest with regard to August series. Some stock futures, Apollo Hospital, Neeraj highlighted. Remember, the earnings came during market hours on Friday. The profits were up 71%, but the kind of action that you're seeing on stock today is unbelievable in a way. The August futures are just about trading flattish. The underlying is up 14%, and it's gone up on really high volumes in the cash side. That's the AV80 function of Bloomberg, which is indicating today's volume vis-a-vis the average volume of last 20 days. That's the blue line down. So watch out for Apollo Hospital's delivery data for sure. The other one is United Breweries. In the morning today, we spoke to the management and some positive commentary coming in there. The stock is now trading at days high on high volumes, fresh long position seen on the futures side. So good going for United Breweries. And Sun TV, though the numbers looked okay, but the stock's actually corrected a lot. In fact, if you look at the futures side, we've seen some short build-up coming about, though the futures are also actually trading at a discount. The future screen will show you how much build-up has been seen, and the volumes on the cash side, as your screen tells you, that's the white line which is indicating today's volume as compared to the average volume that one has seen for Sun TV in the last 20 sessions, Neeraj.
Well, so individual names out there, but let's speak about the markets by and large and get your global voice. On the show, joining us today is Daniel Morris of BNP Paribas Asset Management. Daniel, good having you. Thanks so much for taking the time out. Seems like the markets are in a mood of digesting almost all negative news very, very well. The Turkish fears and the possibilities of a contagion are not being factored in at all right now.
Well, I think you are seeing slight contagion. If you look at what's happened with the South African rand, with the Brazilian real, and with the Russian ruble, they have been down certainly over the last week, and I think that has been exacerbated by the tensions in Turkey. And we also know just year to date you've had weakness in EM currencies, and I think Turkey's given a bit of a push to that. So it's true there's not been a broad sell-off across EM currencies. I think just a bit more weakness, and weakness in ones or in currencies that were already vulnerable because of the broad environment of rising U.S. interest rates. Reckon, Daniel, that EM currencies could become even weaker, and could that then have a bearing on how the other asset classes, namely the equity markets of these economies, could face some pressure? Because until now it hasn't happened. In India, for example, we just have a half a percent gash on our markets, even though the currencies weakened a lot more. Well, of course, the impact of weaker currencies on equity markets is a bit of a double-edged sword. On one hand, it should clearly help the exporters because your country's exports are going to be cheaper to Europe and to the U.S., so that should be beneficial. On the flip side, if the currency is weakening, that raises expectations that the central bank will have to increase rates, and of course that has an impact on growth because at the same time central banks don't want the currencies to depreciate too much because that's going to push up inflation. So I think you will see differentiation between those countries that do have a bigger export share, or at least within the equity market. Companies that do export a lot, that should benefit from the weaker currency. But at the same time, investors, and particularly fixed income investors, are going to be looking at the dollar debt exposure and what the weaker currency tells them about the ability of the companies to repay the debt. So it's a balance between those two factors that I think explains whether or not equity markets react positively or negatively to a weaker currency.
Hi, Daniel. Good afternoon to you from India. Do you think then the correction that we've seen for Turkish lira is overdone, or are you expecting more correction? Because the economy is also under pressure. If you look at the Turkish economy, they're running into current account deficit. The inflation numbers I was checking for the month of July is somewhere in the range of 15 to 16%.
Yeah, well, we certainly would be cautious at this point of saying that this is the bottom. As you point out, there's really two factors that are driving this now. You've already had significant macroeconomic weaknesses that people have been aware of for a long time in terms of kind of credit-fueled growth in Turkey, significant issuance of U.S. dollar debt, and so on. So people have actually been worried about Turkey for a long time. And now, of course, deterioration of relations on a political angle between the U.S. and Turkey. And certainly on that front, impossible, frankly, to predict how that's going to evolve at this point, but clearly having an impact on the currency. So if you had things patched up relatively quickly, that would offer, you would imagine, an opportunity for the currency then to strengthen, given how far it's fallen just even in the last week. And at this point, you would imagine the economic vulnerabilities are well reflected. But I think it will depend as well on how the central bank in particular reacts to what's happened, whether we do see an increase in interest rates, speculation around IMF bailouts, and so on. So I think there's still significant degree of uncertainty, and really we're in a wait-and-see mode.
Too early to ask, Daniel, and you mentioned bailout then. Do you expect any sort of bailout for the country from IMF?
I honestly would have to wait and see, because clearly, that's as much a political as an economic decision, whether or not Turkey would want to take that step. Clearly there are the weaknesses in the economy, but we also want to wait and see what the reaction of the central bank is first.
And among the Asian currencies, because of the depreciation that we are witnessing for Turkish lira, which currency, according to you, is more vulnerable for depreciation from current levels now?
Well, I don't have a specific call in any of the Asian currencies. I think what we're focused as much on is kind of strength of growth within Asia, and particularly within China. We don't want to lose sight of the importance of Chinese growth for the rest of the region. I think we did get encouraging data last week with the import and export figures for China, which beat expectations and were still strong. So I think we do see continued reasonably good growth within China, so that obviously should benefit the rest of Asia. So we think that's going to be the key factor through the rest of the year, even if, of course, we do have our eyes focused on what's happening with the currencies on a more short-term basis.
Daniel, I don't know if you track equity markets at all or just even look at the sentiment out there, but seems like almost all bad news are getting digested very well, be it the scare around the US-North Korea spat, or the US-China spat for that matter, or the weakening of a bunch of EM currencies. Every dip has been bought into very, very strongly. The mother market, the US, is doing rather well too. Do you think that's one key factor that could keep the sentiment for the rest of the year upbeat? Because the earnings season in a lot of these economies, including the US, is rather robust.
Well, I guess, it's whether you see the glass as half full or half empty, because I would almost say sentiment has been negative, and that's why equities have not gone up more than they have. Year-to-date returns aren't particularly strong, certainly far less than we saw last year. But when you look at certainly earnings growth, particularly in the U.S., if we look at global economic growth, which is still quite robust, even if not as strong as we'd expected at the beginning of the year, in that environment, you would think equities would have showed further gains or more gains than we've seen. And I think the reason they haven't is more because of negative sentiment. We would have thought equity markets would have appreciated more. At the same time, we have the ever-present current concerns around trade relations between the U.S. and Europe, Canada, Mexico, and China. And we think that negative sentiment has been one of the factors weighing on equity markets. But as you point out, they haven't been they could have been worse with some of the other issues that have come up over the course of the year. But what we're really looking for is a diminution or a falling in the trade tensions. And if that happens, that should give equity markets an opportunity to appreciate.
What's the base call? I mean, again, I don't know if you have a call on equity markets per se, Daniel, but if you do, or if your team does, what's the base call for the rest of the year? Do we stay stable and maybe inch higher, or is there a higher probability of a pullback, which I think everybody's been waiting for, but somehow not getting?
Well, our basic allocation is overweight equities versus fixed income. So we are overweight risk, modestly overweight equities, and our overweights by region are particularly Europe and emerging markets. So we still have, a modestly optimistic view for the outlook for equities through the rest of the year. At the same time, very conscious of the risks. So looking for opportunities really to hedge any potential bad news that could come out. Most obvious being around trade, but plenty of other things that could surprise us. That's to some degree always the case. But we do think, given the strong earnings that you had, particularly in the U.S., given what are still good earnings growth expectations in local currency terms for emerging markets, we think that's a solid foundation for further appreciation in equities through the year. And the degree that that happens, we think, really is going to depend mostly on how things evolve on the trade front.
Okay, since we're on the topic of currency, let's just pull up the Indian rupee. Remember that touched record lows in today's trading session, and currently it is trading at 69.69 to the dollar, and we've seen depreciation of almost over 1% coming about in today's session. The currency markets are open till 5. Let's see where the closing comes about. Daniel, keeping in mind all the factors that you, by the way, just highlighted with, earnings in U.S. markets improving, the street expecting more rate hike coming from Fed. So in light of all these events and also currency rout now, which is there in the emerging markets, where do you see the fund flows moving in the second half of this year?
Well, that's certainly going to be a key driver for both emerging market equities and emerging market debt, because I think the phenomenon that we've seen since the beginning of the global financial crisis and quantitative easing pushing down developed market government bond rates, that then incenting investors to go further out the risk spectrum, so from government bonds to corporate credit, from investment grade to high yield, and developed out to emerging. So you had what we call tourists investing in areas and asset classes where they traditionally don't. Now that U.S. Treasury yields have moved up to more normal levels, at 3% on U.S. 10-year, to be honest, looks reasonably attractive, given that it's AAA rated, and that's still hard to find globally. It's not so clear that investors are going to want to take the risk in emerging markets, and we have seen redemptions both from emerging market equity and debt funds over the last couple months. The belief is that those redemptions are coming primarily from those investors, again, that hadn't traditionally invested in this asset class, the tourists, if you will. So if it's true that that money has come out and won't necessarily go back in, given that we expect global rates to rise slowly, I don't think we're going to see necessarily a big return to inflows into emerging market assets, but at the same time, we don't expect to see significant redemption. So hopefully a bit more stability, kind of ongoing, steady allocations to emerging markets, say from institutional investors, as opposed to the more volatile retail money that we think went into emerging markets opportunistically and now perhaps has largely come out.
Daniel, before we let you go, a direct question on the Indian markets and any feedback that you're getting from the FI community with regard to Indian markets?
Well, if we think about emerging markets more broadly and kind of what markets and what regions and countries are more attractive, given that we do expect trade tensions, trade relations to be an ongoing concern. We're not sure of how tariffs are going to evolve between the U.S. and other countries. At the same time, seeing that the dollar is going to continue to be a factor for emerging market assets, we're focusing on markets that have a more robust domestic demand story. So larger markets like India that can see domestic earnings growth through domestic demand, through domestic business investment, is probably a safer play as opposed to the smaller markets that are very trade dependent. So from that point of view, India to us does look attractive.
Okay, Daniel, we'll leave it at that note. Appreciate you joining us today and taking us through your views on what's happening with the currency market and also equity markets worldwide. Well, Indian rupee continues to see further depreciation in today's session, and we've seen that currency rout across the globe coming in, especially for the emerging market currencies, which was started from Turkish lira. In fact, if you look at Turkish lira, it's just not that depreciation started after U.S. President doubled tariffs on steel and aluminum. In fact, if you look at the Turkish lira in last 1 year or two, the currency has seen correction of nearly 50%. So it remains the worst performing currency in the emerging market basket, at least in the last 12 months. That's about the currency market, but let's switch focus to earnings now. And the big result today is Tata Steel among the nifty earnings. The company is likely to report an operationally strong quarter on back of high realizations. Well, some improvement is also seen for its European business on account of low maintenance cost. Nikki Mirchandani is here to tell us what the street is expecting from the company this time around. Nikki, over to you.
Hi Navneet, before the basic numbers, I'm going to highlight the fact that Tata Steel realizations are expected to be higher as compared to JSW Steel, SAIL and JSPL put together. Basic numbers, revenue, we're looking at 22% uptick to a number of 35,900 crore on consolidated basis. EBITDA is seen higher by 36% at 6,760 crore. Profitability is seen around that 2,700 crore kind of a level, but then these are not as important parameters. What we really need to keep an eye out will be the consolidated volumes. Now that number has already been given out. That's a 10% uptick there, 6.4 million ton. However, the consolidated EBITDA per ton is expected to be higher around the 10,500 rupees, and consolidated realization is expected to be around that 55,000 per ton kind of mark. Importantly, we'd be looking at Tata Steel's standalone EBITDA per ton numbers, which is expected to be around 16,245 rupees as compared to nearly 9,886 rupees. That's mainly on account of higher realization, which is expected to offset the kind of coking coal pressure cost that the company could witness. And also the spot domestic HRC prices remain high, which will be expected to aid the realization of the company. In terms of the European EBITDA per ton, that is seen inching lower year-on-year basis, but then sequentially you might just see a bump up there on account of improvement of maintenance cost, a lower maintenance cost. Key things that we like to keep an eye out will be how the spreads are moving given the cost inflationary pressures that steel industry is currently facing.
Okay, let's see whether higher realizations will aid the EBITDA per ton for this quarter or not. Nikki, thanks a lot for joining us and taking us through what the street is expecting from the company. Remember, the earnings come out post-market hours today. The stock's not doing too much right now. It's just about trading flattish around the levels of 575. Staying on with earnings, there's one more stock which is reacting probably to its earnings, and we've put spotlight on United Breweries. The stock has gained for the 4th straight day today. It has also seen a positive reaction to its numbers, which came, I believe, on Friday. However, the analysts remain divided on the street with regard to prospects for this counter. Neeraj is here to tell us why.
Yeah, I mean, interesting, Navneet. So, for example, we were speaking to the head of research at Ventura, and he said he took heart from these numbers because the volume growth numbers looked very positive. 12% volume growth versus the industry average of 9% volume growth. I was looking at the Ambit note, and they said that while the volume growth is looking okay, in value terms, the numbers aren't the best, and maybe that leaves some room for disappointment. However, the management sounded, and we'll make you hear what the management had to say, but the management sounded very sanguine on both the volume and the value front, despite the fact that we're hitting a busy election season over the course of the next 12 odd months. Now, let's just get the trading pattern in today's session, and you will see, it'll be very interesting to see what the delivery volumes and the percentages out here, because the volumes have certainly moved up in the session today. Big jump in volumes. This white line is the jump in volumes versus this blue line, which is the 20-day average. So the volumes have certainly inched up in trade today, and the stock is up about 7% odd. What about the brokerage community? It obviously trades at an optical premium to what the other companies trade at, but maybe that's with reason. Okay, this is the ANR. No, let's just get the GD back, and you will see what I'm talking about. Yeah. So, division: 5 buys, 5 sells, 1 hold, and trades at a premium to averages. However, if you just look at what the ANR will now tell you, and it will show you the kind of return potential that exists for the stock. The sell side seems to believe that after this move, it's more or less priced in the kind of gains that could come in. The only heartening part about this whole conversation with United Breweries was that the million-dollar question that we hit 2 elections, and if Karnataka is any indication of what happens to the business, 3 state elections, 1 national elections over the next 12 months would mean that there could be disruptions in business, which could maybe even hurt margins. But the management sounded confident that the teams will be able to take it in their stride. However, keep in mind, one key note that he mentioned, and you will hear it in the interaction, is that Q1 was the best possible margin. The gross margins expanded, but this was the best possible margin. In the quarters to come, those margins will certainly see a bit of a downtick. Hear out what Shekhar Ramamurthy had to tell us.
Well, like I said, the market is growing in many parts of the country, 9-10%, and we are confident of being able to grow ahead of that. So yes, Q2, Q3 also should see growth in the region of 12-13%.
Just an off-the-cuff question. The news that we got was that Maharashtra has cut excise duty on strong beer from 235% of manufacturing cost to 175%, if I'm not wrong. Does this give a bit of a tail to the state of Maharashtra for you as a company?
Well, Neeraj, I need to clarify this because lots of people are asking us about this. There has actually been no change in duty structure for beer in Maharashtra. So it's some kind of slight misreporting which has happened. Oh. And this is actually for RTDs and not for beer at all. So beer duties went up last October and they continue to be very high.
Oops. Okay. So thanks for giving that clarification. Now, Shekhar, one small question that I think the street has, and I'm reading out from one of the reports that has come out, and they are saying that according to them, of course, the numbers that you've given out were in line because they anyways had higher than street estimates. But there is a line that out there, Shekhar, in the report which says that we await clarity on why value growth is trailing volume growth despite price hikes and a favorable state mix. How would you respond to this?
Well, the value growth is not trailing. Typically, we have a value growth it's a little bit ahead of volume growth. So I think that's what the market is expecting from us. But that will catch up. It's a matter of state mix. If you see quarter one, West Bengal is a high revenue market, but it declined. Rajasthan is a low revenue market because of very high duties, price control, and that grew very fast. So it's a question of state mix. The markets of Telangana and Andhra grew very rapidly. And they are relatively lower price to us because the government fixes the price at that level for us. So it's a matter of state mix, not a fundamental issue.
Okay. You reckon it will change starting quarter two itself, looking at the state mix figures as well?
Well, I can't say that because, the states of Rajasthan and Telangana are growing fast. Now, the way we see it is we are a national player. We want to be leaders in all parts of the country. And we have a wide portfolio, both of states and of brands, which will help us drive revenue ahead of the industry and drive revenue ahead of the volume growth. So we will continue to participate fully in the growths in Telangana, Andhra, Rajasthan, and we will look at driving the growth of our super premium brands and of our profitable states. So in time, I'm not saying it will happen in Q2, Q3, but in time, our revenue growth will continue to be ahead of volume growth.
A lot of popular sentiment is that during the run-up to the elections, alcohol sales will go up. Now we're seeing a trend wherein, because of the factors that you mentioned that happen in the state of Karnataka, there are some disruptions that happen in volumes, and as a result of that, sales get impacted as well. The next 12 months is the busiest election calendar that we've had in a while. Yeah. How do you expect these 12 months to shape up? Not just the 9 months of the current fiscal, but maybe the next quarter as well, which might well have the national elections.
No, it's a fair question, Neeraj. As I always say, elections are a hindrance to our business and they don't aid it, particularly for beer. Beer doesn't lubricate elections. All the rules in terms of dispatch, in terms of hours we're allowed to operate, outlet closures on account of voting days and counting days, all those are a huge disruption for our business. So yes, it's going to be very challenging because there are many state elections coming up in the next 6 months, and then, as you rightly pointed out, quarter one of next year is most likely to be the national election. It's going to be a big challenge, and it'll call for a whole lot of very meticulous planning from our supply chain and sales teams to be able to mitigate the disruptions.
Well, that's Shekhar Ramamurthy of United Breweries, and as I said, sounded fairly confident and fairly candid. The stock though up 7.5% in the session today, and as our headline stated, fourth day of gains. If you just do a GIP4 or GIP5, you will see the kind of gains that United Breweries have thrown up in the last 4 or 5 sessions there. The lion's share has come in today, but it started inching up over the last couple of trading sessions. So, well, good moves for United Breweries in the last few days. Our technical experts should be with us any moment. In fact, Hemen Kapadia does join us. And before we get to talk about the market, since we are on the topic of United Breweries, maybe just let me take a quick question on that one first. Hemen, good having you. Thanks for joining in. It's not that the results were so blockbuster that the stock will have a continued uptick the way maybe a Vinati Organics, etc. have had, but it's had a good run the last 3 sessions. Would you, for somebody who has a position, what should he or she do? And 2, can somebody take a fresh position?
A very good afternoon to you, Neeraj. Thank you for having me.
Pleasure.
Now, firstly, if we have a position, I think I would book some profits. Between 13.10 is the all-time high, Neeraj. I'm not saying it won't, but since the run-up has been from 1030, that's almost 30%. Expecting it to run away for here, like you said, like Vinati, seems a bit far-fetched. So closer to 1300, we've already gone to 1299 almost in NSE cash. I'd say one should book partial profits. Buying fresh, I don't know. It looks good. We're in an uptrend, but after such a run-up without a correction, I am too conservative to recommend a buy. If I would need to buy it closer to 1220. I'm not sure if that happens in the near future.
Okay, that's the technical view coming in on United Breweries. But Hemen, also tell us what's the call on the index? We've second straight day of correction coming by. Is it a pause in the current market momentum that we were witnessing?
I think so. I think we've had a very nice run up, Navneet, and I think we needed some sanity. So multiple reasons. One, the OI at 11,500 was 41, is currently 49, but it's pretty high. I don't think that gets taken out in a jiffy. There's overbought situation in the market, negative divergences, crossover sells coming in today. The MACDs now need, I mean, the day is not yet over, but it's going to give a sell first time since 5th of July. The VIX has spiked up. In last entire week, we've been around 12.5. We were at 12.85 on Friday. We are at 13.5. The dollar has finally given the breakout which we were fearing. Dollar index has closed above 95.5. The USD INR has given a breakout. So I think the whole, and the OI 2.8 crores as far as the Nifty is concerned. Bank Nifty lost 5%, but still 29 lakhs is pretty high. Everything seems to suggest we've taken a breather. I'm not saying trend reversal, profits of doom, but I don't think 11.5 doesn't get taken out in a hurry. And 2, I think we need to consolidate, correct, react, whatever.
So any strategy?
I have a buy on the Nifty 11,200 put Navneet at 45, stop loss 35, target 65, because I have a feeling that this sequence of higher tops, higher bottoms and regular new highs has taken a halt for the time being. 11,360, 11,235, 2 levels which I think can be possible.
Okay, that's Hemen's view coming in on markets, and he's suggesting to buy the 11,200 put on Nifty. But let's also bring in Sumeet Bagadia, Associate Director at...
Sorry, just before that, no, just Kadila numbers out. Just want to mark those before we get in Sumeet Bagadia. The net profit is by and large in line with our estimates. The stock is down about a couple of percentage points, but the net profit is by and large in line with our estimates. The revenue number is at 2890 crores. So that's the revenue. This is the bottom line number of us on your screen, which is 460 crores versus 448. Revenue at 2890 crores versus our estimates of 3065 crores. So that seems to be slightly off from what we were working with. As a result of that, the stock corrects about 3.5%. Maybe there's more than what the 2 numbers that we have, because now the stock is falling about 4% apiece. Just waiting for some other numbers to come out. I don't quite know if the operational numbers would have looked okay, and if there are one-offs that are impacting this performance, but from the looks of it, the initial trading knee-jerk reaction is on the downside. How big a negative? Well, doesn't the optical, I mean, the reported numbers don't seem to be painting a really grim picture, to be honest. It's about a 3% odd miss or a 4% odd miss from the expectations on the top line, and the bottom line has been ahead of estimates. I believe Mr. G. Chokkalingam is with us. So just before I get to Sumeet Bagadia for the index and the specific calls, let's get in Mr. G. Chokkalingam. He's Managing Director at Equinomics Research. Mr. Chokkalingam, good having you. Kadila Healthcare, if you just want to dwell upon these numbers for a bit, the bottom line numbers, as I said, marginally ahead, top line slightly lower, don't quite have other numbers, but what were you anticipating, if anything, and what's the call on this company and this business?
No, certainly it's a decent company. And I firmly believe that the mid-sized and large pharma companies should do well going ahead in 6 to 12 months, including Kadila. I have not looked at the details of the numbers, but certainly after a recent correction, all the stocks look good. In fact, this morning we've seen that in Q1, pharma export was about 17% in dollar term after growing at just 3% in FY18. So I would remain positive on stock like Cadila.
Okay, that's the view coming in on Cadila. Just got the numbers open. It is the finance cost, I guess, on consolidated basis has seen an uptick compared to the previous quarter and also on year-on-year basis. So that's one number, 35 versus 15. So it's almost doubled sequentially, the finance cost. The other numbers which I can just see, the costs are just about okay, and employee benefits have gone up marginally. Not on year-on-year basis, it's an uptick, but compared to the previous quarter also it's seen a rise. So probably, I think we'll wait and watch for the margins if operating performance has been dented for the quarter.
Well, certainly seems to be slightly off the mark and down about 4% in trade. Sumeet, Bagadia, maybe a chart check on Cadila, and then of course, what's the Nifty strategy for the day?
Hi, good afternoon. Well, see, Cadila has given some correction from higher levels. It has, looking at the chart, it seems that there is a possibility that some more correction can be seen from present levels. That means on downside, we can see levels of around 350. Overall, the stock has supported around 340 levels. Till the time 340 is not taken away convincingly, stock will move in the range of around 340 on lower side to 380 on higher side. I think either side breakout will give a good move in Cadila Healthcare. If 340 is taken away on downside, then we will see a sharp correction. At the same time, if 380 is taken away on higher side, we will see a good upside move till 415, 420 levels. I think immediately from present levels, we can see a fall of around 10 to 15 points. And as far as strategy on Nifty and Bank Nifty is concerned, today we have seen a gap down opening. After the opening, we have seen some recovery. Now looking at the chart, it seems that 11,300 can act as a support. So till the time these levels are not taken away, it's better to initiate long positions at lower levels. And on higher side, once 11,400 is taken away, then we can see move till 11,450 or 11,500 levels. If we talk about Bank Nifty has taken support at around lower levels, and it seems that 27,700 can act as a support. So till the time these levels are not taken away, it's better to initiate long positions for the upside target of 28,000 and 28,300 levels.
Okay, that's the strategy in the Nifty Bank. By the way, Cadila is now down 5%. One, a top line miss. Just spoke to Darshan. So one, a top line miss. Two, a higher other income and probably lower tax numbers, which have aided the bottom line numbers. So the reported bottom line looks better than what we were working with because of a couple of other factors than operational, and maybe that's aided that number. But the top line miss by itself, enough reason for the market to be disappointed. I must tell you, the volumes in the last 10 minutes of trade have really shot up for Cadila. It was trading at about 2.6 million. It's now at 3.3 million shares. So a very big jump in volume activity in just the last 5 minutes after the numbers have come out. Fair bit of trading happening there. Look at the bump up in volumes that have happened for Cadila just immediately post the numbers. Certainly looks slightly wobbly right now, Navneet.
Yep, and as you can see, that's the AVAD function of the Bloomberg, which was there suggesting how volumes have picked up just post the numbers. And as Neeraj was highlighting, the other income is on the higher side. So it includes almost 66 crore profit, which has come in this time around after selling shares of Bayer Zydus Pharma, is what you can see in the notes to earnings for the quarter. But let's get you some strategies going. Cadila has still seen cuts of almost 4.5%. Hemen, in terms of stock specific, you're betting on ID stocks for the day?
Yes, I think I have a couple of calls, Navneet. Firstly, I have a buy on HCL Tech. I think one can buy HCL Tech. It's moved up a bit, but I'd wait for a small decline around 974. Stop loss 966, target 990. Positives on the daily chart, when you take out crossover buys above 55-day exponential moving average. Secondly, I have a sell call on KPIT, but it's on a bounce. Yeah, so sell KPIT around 296, target 303, stop loss 303, target 282. Navneet, lower top, lower bottom, crossover sells on the daily as well as weekly for 14% short built up on Friday. Stock is top heavy, negative divergence, correction is in the office.
But today's bounce back, does it worry you? Because I've been tracking the counter in the last two sessions, there was short build up.
Yes, I think this bounce is a chance to sell simply because we've come off from 307 to 286, Navneet, and frankly speaking, we're just retracing the fall. So I think it's an opportunity to sell.
Sumeet, what about you in terms of individual stocks? What are you betting on this afternoon?
Well, I have two stocks for the day. The first one is Tech Mahindra. The stock is looking good. I think from here on there is a possibility that we might see upside move, in which we can see levels of around 690 or even 700 levels. So for a trading perspective, those who have taken long positions, they can hold on the existing long positions. One can initiate fresh long positions with a strict stop loss to be placed at 645 levels on lower side for the upside target of 690 levels. The second stock for the day is Cipla. Cipla is looking good on charts. From here on, there is a possibility that we might see a move till 650 levels. So for a trading perspective, one can initiate long positions at the current market price. One need to maintain stop loss of around 620 on lower side for the upside target of 650 levels.
Okay, so those are a couple of strategies coming your way from our technical experts, but there are a lot of stocks which are buzzing. In fact, when we started the show, we were talking about Apollo Hospitals, how the volumes on that one has gone up. The numbers came out on Friday. The profits were up nearly 71%. Mr. Chokkalingam, we've seen a strong buying momentum on high volume, backed by high volumes for Apollo Hospital. What did you make of the numbers?
The numbers are good, but already it was valuation was stretched. And also of late, Apollo Hospital, including other hospitals, they started showing a very inconsistent quarterly performance. If you look at the last 4 to 8 quarters, they were not able to show the consistency in the performance on a quarterly basis. So I would not rush to buy. According to me, Apollo Hospital is still stretched in terms of valuation.
Okay, stretched in terms of valuation. But Sumeet, on the charts, what would you suggest after a 12 to 13% rise on Apollo Hospitals?
Well, see, the stock has given a very good move, and from here on, it can face resistance at around 200 DMA, that is placed at around 1080 levels. Once the stock is able to break 1080 on higher side, then there is a possibility that we might see extended move till 1150 levels. Till the time these levels are not taken away, it can move in a range, and the range can be 1000 to 990 on lower side to 1080, 1075 on higher side. I think those who have taken long positions, they can hold on the existing long positions with their trailing stop losses. And if anyone wants to initiate a fresh long positions, then one can initiate at lower levels, somewhere at around 1030, 1040 levels. Because now it seems that the way stock has given a good upside move today, it seems that the stock can move much higher from present levels. Only concern is that it has resistance at around 1080 levels. So once that is taken away, we can see a move till 1150 levels. So one can hold on the existing long positions.
Okay, hold on to your existing long positions in Apollo Hospital. And Mr. Chokkalingam, before I get to your top fundamental ideas for the day, I just want a view on something like Sun TV, which has reacted very negatively to its numbers. However, the numbers optically were not looking that bad. The ad revenues are up 20%, subscription revenues for the quarter are up almost 15%, and we've also seen a rise in terms of margins for the quarter, 7% lower for this one. What are your thoughts on Sun TV?
Yeah, I am also a bit surprised. You are absolutely right. The performance was not that bad, but still the stock has come down a lot. I believe, in fact, we don't have any position, but I still believe that after this correction, one can certainly look at it because changing political scenario also augurs well for the stock. And also the stock before the result also corrected a lot, and therefore I would suggest to look at this stock quite seriously by the investors. And another reason is that despite stiff competition coming from other channels in Tamil, like Star TV, ZTV, this company has posted a decent performance for June quarter, which was surprising to me. In fact, I was expecting very bad results, but it's quite a big surprise.
Okay, that's Sun TV. It stocks, well, the numbers, led by the numbers predominantly, has done rather well for itself. And interesting, not everybody in the exhibition space, Navneet, has kind of gone out and done gangbuster numbers, but Sun TV for itself has had fairly decent operational, so 65% margins was not bad. Somehow, the market not taking cognizance of what's been a quarter of outperformance compared to what the expectations were. 7% down in the session today.
Yeah, and I think the stocks also corrected. If you look at the performance, I remember this used to trade somewhere about 800 or 850 at one point of time. But today, barring today's move also, I remember the stocks, I've seen it at elevated levels. But very quickly, Hemen, what's the bottom for this one? In the last 3 months, it's down almost 11 to 12%.
Frankly speaking, That's a bit surprising as far as Sun TV is concerned, Navneet. One would have thought that we are trying to stabilize, but 60 lakhs, I think we've seen a 25% short built up today. And yes, I think coming back to the main question, the bottom, I thought closer to 725 would have or should have been the bottom. We are probably going to test that, Navneet, and 750 and 725 in that order. If that breaks, I think all hell could break loose. On a slightly longer term charts, we are in a downtrend, but we were seeing medium term stability. But I think that can be used in the past tense now.
1098 is the 52-week high, and I guess I was referring to that 4-digit number which was last seen in the month of January this year. So that's about Sun TV. But Mr. Chokkalingam, let's get to your top fundamental picks. I remember you've suggested Andhra Sugars earlier also on our show, which is now, according to you, a caustic soda play.
Yeah. In fact, personally also I hold Andhra Sugar and Nesco. We have been continuously buying. Even today we have been buying for our clients. As you mentioned, the name is misnomer. It is predominantly into caustic soda and industrial chemical. Recently, it's a joint venture. Andhra Petrol stock seen threefold rise. Another subsidiary, Josil, which is also listed, has turned around its operation for June quarter. So that is added reason for reiterating my conviction in the stock now. And also the company has posted more than 90% year-on-year profit growth. I'm expecting around 60 rupee EPS for next year, that is FY20. And even if I give 10 PE, it is worth about 600. As I mentioned earlier many times, that investment-rich company, the investment in Andhra Petrol, Josil, Andhra Pradesh Gas Corporation, they themselves account for more than 60% of the current market cap, and also high dividend yield paying company. And the second is Cyient. The IT stock is down by about 22% from the peak. I have picked up this because of rupee weakness and also the correction the stock has already seen. But most importantly, the valuation. If you look at enterprise value to annual sales, it's about 1.8 times, whereas all other IT companies like Mphasis, Mindtree, they trade as high as 3 times. Even on trailing PE basis, Cyient is one of the cheapest. So I firmly believe that Cyient can give anywhere from 25 to 30% return. Lastly, Nesco, about a couple of weeks back, we saw some media report of foreign PE funds buying the IT parks in Chennai at a phenomenal valuation. And Nesco has 4 IT parks. Now they are considering a 5th IT park, and a cash-rich company, strong balance sheet, no debt at all. And it is set for a lot of expansion because it has got totally about 70 acres of surplus land in Mumbai. In fact, I have pitched this as one of the topmost 3 high conviction ideas from economics to my clients, and I believe in it, and we continue to buy even today all these 3 stocks.
Very interesting. The problem, Mr. Chokkalingam, with Nesco is that it's not a stock that is institutionally owned. I believe one of the businesses that they are trying to get into in a big way, which is that catering bit, it's difficult to track the kind of pilferage or etc. that would happen while there would be industry standards thereof, because a lot of other companies are trying to do that and not being able to give a correct picture. Apollo Sinduri Hospitals, for example, which also has this catering business through hospitals. How would you, I mean, what's the business in Nesco that gives you the comfort that you go out and buy this for the next 3 or 4 years? Because the numbers and the value that it brings via the land is always known and always there. Somehow the market doesn't seem to be too excited with it.
No, in fact, very interesting. I'm happy that you asked all these questions. 2013, on similar channels, I recommended at 550. That time the face value was 10. Today it is 2 rupee face values. Already it has gone up by 500%. I still believe it can give 100% return. To answer your specific questions, this is a very unique company. It is using the surplus land by adding exhibition centers and IT parks year after year. And phenomenal expansion of exhibition centers and IT parks have happened. And that has been contributing. That is why in the last 5 years, the profit has got doubled. And the catering business is very small. They just started recently. But again, that is also quite unique because they have got 4 IT parks, massive exhibition centers, and the catering business caters to the in-house requirement. And as I said, in my estimate, only 35 acres of land is used for IT Parks and Exhibition Center, another 35 acres is simply lying surplus, and it is used for two-wheeler and car parking. It's a very smart strategy to retain the land bank. So slowly this land would be used. And as I mentioned, very rare to see debt-free company with such a huge land bank. It has got a free cash of 500 crore. In fact, the chairman has mentioned in the AGM that they would remain debt-free, and all the proposed expansions of IT Parks and Exhibition Center they would do through internal accrual. And the stock also trading only around 19 PE, surprisingly, despite so much of cash. So I believe in 3 to 5 years, the stock should minimum double. I won't be surprised if it triples also. That conviction comes from the fact that, the rental model is a play on inflation. As inflation keep rising by 5%, the IT Park and Exhibition Center rental incomes are bound to increase. That's what's happening over the last 10 years. So therefore, I remain extremely confident on NESCO. Okay.
Fair call, Mr. Chokkalingam. A couple of other stocks which have done rather well today. Vinati Organics for one, up another 4.5%, 1322. Some of the quarter and the commentary from the management seems to suggest that the momentum that they showed in quarter one will only last, if not become better, in quarter two, quarter three, and quarter four, and which is why this month's chart or the last 30 days chart will show you the kind of big uptick that we've seen in Vinati Organics. We used to trade around that 800, 900 level. Suddenly in the last 1 month, 36% uptick that has come into this stock. Sumeet, Bagadia, firstly, what do the charts suggest? It's broken into newer territories. So I don't know if your charts can really predict what levels can it go to, but if it's possible, any levels that you have in mind?
Talking about Vinati Organics, right?
Yes.
Well, the stock has given a one-way move in last 5 to 6 days time horizon. We have seen that the stock has moved up from the levels of 1000 to 1320 levels. Immediately, if we talk purely on technical terms, it's looking overbought on charts. But still, the structure is positive, and there is a possibility that we might see extended move till 1400 or 1450 levels. Those who have taken long positions in last couple of days, they can hold on the existing long positions and can use the trailing stop losses and can ride on profits. I think one can place trailing stop losses somewhere at around 1260, 1270 levels for the extended targets of 1400 and 1450 levels. And it's better to avoid fresh long at current market price.
Okay, avoid fresh longs at current market price for Vinati Organics. Pull up MEP Infra, the numbers just came out and they were flashing there on the screen. Profits are at 26 crore versus 13 crore, which was seen in the corresponding quarter. We've seen some bit of movement post the earnings have come by, and the top line too has seen a good growth for the quarter. Any quick thoughts here on the charts? Yeah.
150, 52. 16 months oversold, downside appears limited, a short-term bottom in place. Navneet, worst seems to be getting past us, but for that statement to hold its sanctity, I think 53 needs to hold from a closing point of view. A close about 64 should improve. Yes, I have a feeling it's overdone. Navneet, downside appears limited. We are trying to stabilize. I don't know how much time it takes, not too much I hope, but if the level holds, we should be higher in the next couple of weeks if the lower level holds.
Okay, that's MEP Infra for you. In fact, a lot of numbers have come by on back of which we've seen reaction. Aarti Drugs is the other one. Profits are at 23 versus 11 crore. And the revenues for the quarter are up almost 45%, 374. You can see the stock reacting quite sharply on the upside after the numbers have come by. Very quickly, Mr. Chokkalingam, any thoughts on stocks like Aarti Drugs or MEP Infra?
No, I'm sorry, I've not looked at the results, so I was not prepared.
Okay, that's a currency alert. By the way, on your screen, we're inching very closer to the mark of 70 to the dollar. Currently, Indian rupee is trading at 69.77, and it has depreciated almost 1.3%. I mean, I think you look at currency charts, right? And I was just reading one note which has just come from Credit Suisse. They're saying that rupee is actually following the dollar index movement now.
Yes, I think there was a disconnect for a long time, Navneet, and frankly speaking, we are following the dollar index. I think the warning came in on Friday evening itself. In the dollar index, we have a breakout of sorts, closed about 95.50. And if you remember, we spoke about the rupee going to 72, 74 and 77 a few weeks back, Navneet. But I thought that's going to take some time happening. We are happening super fast.
In fact, today's move, according to CS report, this is the largest one-day move in more than a year that we've seen this depreciation. And obviously, it's very firmly breached the mark of 69. Let's see where the closing comes about.
You know, it's very interesting. Bhaskar Panda today mentioned that, so divergent views. Dhananjay Sinha was saying that according to their calculations, and because he tracks the economy as closely too, that he thought that the rupee will slide below 70 comfortably. Bhaskar Panda believed that it's very difficult to recommend an intraday short out here after the weakness that we had seen then at open. Obviously, it slid further, but he believed that there is a pullback in place. At some point of time, the rupee will climb back. Now, difficult to see how this would happen. You could very well argue that because the lira weakened so much against the dollar, and the dollar strength was just so pronounced against select band of currencies that even the rupee would face the same fate. Whether this lasts or no, a difficult call to take.
I think what will be monitored now going ahead, because 70 is a psychological mark for rupee to break, whether RBI intervenes or not.
Yeah, well,
that will have to be monitored. Okay, that's Indian rupee movement chart there on your screen, and we've seen this is one of the biggest fall in last at least 1 year that we've seen for the currency market. But moving back, shifting focus to equities, I think we've corrected more, 11,359, at least from the time we started the show. Bank Nifty is also down almost 1.2% in trade. So I think the weakness in currency market is definitely being reflected in the equities too. India Cement is the other stock. Actually, this too has corrected post its earnings, which have come by last week. This is down almost 7% at day's low. Hemen, on the charts, would you sell this one at current levels, or would you recommend booking shorts here?
If you have an intraday view, I think you would book the shorts. If I would have a sell, I think I'd sell 1/3 now, the rest at 112. We're seeing some weakness coming in. We've seen a 10 trading session distribution pattern see a downward breakout now. So honestly speaking, not looking good. But just to be prudent, a bounce till 112, 112.5 would make it that much more safer, because the stop loss would be closer.
That's his trade until now. I think we need to slip into a break. Just before we do that, though, mention that aside of Vinati Organics, Indiabulls Ventures is the other one which is nudging new highs. Page Industries, Beauty, 32,400, up another 3%, another $1,000, and continues to rise and shine. And somewhere Suntech Realty may not be gaining as much as it did, I think, in Friday's trade, but still at 1% higher is trading close to fresh highs for itself. So a clutch of those names which are doing so well for themselves. Take a break on that note. Come back on Countdown to get you the Fab 4 stocks of the day. A bit later on at 3:15, we'll also tell you what dealing rooms are recommending in the session today. So first the Fab 4, then dealing room recommendations, and then some closing strategies.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Welcome back. Half an hour to go to markets to shut shop, and we're seeing weakness coming by. Nifty is down almost 70 points now, and Bank Nifty is down 360 points. Some bit of resilience definitely seen with the broader market. So let's just pull up the mid cap as well as the small cap index and check whether there is pronounced weakness that has come in for the broader markets as well, following the benchmark indices which have seen sharp correction. Nifty mid cap actually now down, as you can see. That's the intraday chart. Yes, there is selling which is coming from the top, down 0.6%. Let's just quickly get the European market indices. They did had a weak opening in today's trading session, but let's check what's happening in Europe currently. So all the three key indices are down. It's just between 0.2 or 0.5% lower. DAX is actually down. Remember, that's the German market index which has exposure to Turkey. So watch out for that one. But besides that, whole host of individual stocks also which have been in focus. PBR is one of them, which was in focus on back of the news. But before that, I think we'll just go across to and address IOC. High inventory gains have aided IOC's June quarter results with a substantial jump in its gross refining margins. In fact, Sumeet Sarkar caught up with the chairman of the company, Mr. Sanjeev Singh, and started by asking about the outlook on volume growth for petrol as well as diesel for the current financial year. Listen in.
Let's see, because we have seen drastic changes on month-to-month basis, while the gasoline demand or the petrol demand is driven by the individual's preference or the growth in the sector, and the diesel demand growth is driven by the growth in the other sectors, predominantly the industrial sectors, which is driving the transport of heavy vehicles. Last year, if we talk about last year, we saw very robust growth in diesel, which was close to more than 5%, which was close to 6%, and which is a very, very robust growth. And gasoline, we have been seeing close to double-digit growth numbers. We are still seeing similar high growth on month-to-month basis, but on an yearly basis, we'll have to probably wait and watch. But we expect all the numbers till date indicate very high growth in gasoline demand and very reasonable growth in diesel demand.
Now again, we saw a sharp decline in crude prices, and Brent crude is now averaging below the $73 mark. So does this sharp movement in Brent crude mean that there could be some inventory losses in the ongoing quarter, that is the second quarter of financial year 2019?
First of all, I don't agree with you that $73 is a very low price of Brent, because it's all relative. If we talk about the first quarter, the average price of the Indian crude basket was $72.8. If we compare it with the same quarter previous year, last year it was $49.9. So within 1 year, we have seen a jump of nearly $22 in terms of Indian basket for the crude, which is a very, very significant jump. While if the crude prices do remain in the same range, then obviously we will not see much difference in inventory. While when we talk about inventory gain or loss, we talk about crude as well as we talk about the products also. So while the crude prices, if they remain in the same range, I'm sure that there will not be significant change in inventory, which had been the trend for the industry for quite some time.
Now, earlier we know that oil marketing companies had not revised the prices, fuel prices, I mean, to benefit the consumers. Now, so does this fall in Brent crude mean that you have now more room to increase the marketing margins or the fuel prices?
Let me clarify this, that we don't change our pricing to increase the margin for the company. It's only because we are revising our prices based on the last 15 days product prices in the global market. That's how the prices are down. We run on a fixed marketing margin. In fact, on the contrary, there had been days when we realized that whatever spike, particularly the upper spike, is happening, which is not supported by the demand and supply, and which should be temporary. So many times we have avoided increasing the prices for very short spells. So when the prices are falling, if the prices continue to fall or if they do fall, the benefit will be passed on to the consumers.
Lastly, sir, for how many areas has Indian Oil Corporation submitted bids in the 9th round of city gas auction, and for how many areas so far the company has received the LOI from the PNGRB?
The 9th round of CGD bidding was done for 86 geographical areas, and Indian Oil, along with its 2 JV partners, we have 2 JVs, one with GAIL and the other one is with Adani. So together, all 3, we bid independently, we bid with GAIL, we bid with Adani. So together, all 3, in all 3 segments, we bid a total 57 GAs. And we are hopeful, although the LOIs are still flowing, but we are hopeful to get close to 20.
So far, I guess you have received, along with your JV, so far you have received close to 16. So expecting 4 more to come in the next release that will come in?
I'm saying because all the bids are not yet open, but I'm expecting something something close to 20. It might be plus minus 1, 2. And the LOIs will flow, but we are expecting around that number.
And what is the kind of investment that you will be doing in this in the city gas distribution business?
Of course, the investment will vary depending upon the size of the GA and the kind of commitments which we have made and the kind of growth we see in individual GA, because individual GA is different. I mean, the one which involve large cities have larger potentials, but we expect something close to around 20,000 crores in, let's say, 5 years' time in all these GAs.
And how much incremental revenue that Indian Oil Corporation is expecting from this investment in city gas distribution?
This is a little early, although we did our workups as far as the financials of these opportunities are concerned. But when we talk about Indian Oil, for us, to a large extent, it might be replacement of the existing business also, because when we are providing PNG, it will be replacing LPG, where we are the largest player. When we talk about CNG, then it will be replacing diesel or gasoline to a small extent, and in which segment also we are the largest player. So incremental revenue we'll have to see, because we are looking for more opportunities in these areas, but to a certain extent it will be replacement of the existing fuel also.
Well, that's all that you needed to know about the quarter that went by for IOC. However, let's move ahead, and before we get in back to our experts, it's time now for the show. It's time on the show to get in Yash Kapadia with his list of the Fab 4 stocks of the day. Good afternoon, Yash.
Good afternoon, Neeraj. So we start off with Sandur Manganese, and this one reported an extremely good set of numbers. So their revenue, they grew by about 64% on a year-on-year basis, and not just the top line, it was an operationally strong quarter. So their EBITDA almost tripled on a year-on-year basis, coming in at about 84 crore rupees, and margins, they have doubled from 22 crores to about 44 crores. Coal India had surged as much as 3% today. It was a good quarter for Coal India as well, with Bank of America Merrill Lynch maintaining their buy rating on the stock with a target price of 335, indicating a potential upside in excess of 18% from the current level. Now, the profit number, that came in significantly higher despite a deteriorating sales mix, and going forward, they expect the outlook for volumes to remain strong on the back of increasing demand in power growth and restocking. The IT pack is in focus following the weakness in rupee, so something like a First Source solution that is up about 7% today as the Indian rupee weakened significantly to the US dollar. At my last check, it had hit an all-time high of 69.80 following the developments in Turkey. And lastly, we're also looking at Vinati Organics. This one's been on a roll over the last few trading sessions. In fact, if you take out the move that it had following its results, it still gained in excess of 20%, with the stock hitting an all-time high today. Volumes too coming in significantly higher. Back to you, Neeraj.
Thanks. We'll watch out for some of these names. First Source has had an interesting move today. Before we get in, Dharmesh, Kant, Hemen, a quick thought on First Source.
64.75, Neeraj. I think a short-term recovery is the way I look at it. We are in a longer-term uptrend. We're in a third month of a correction. Neeraj, the downside probably should get limited. So if you have a longer-term view, stock doesn't look bad. 58 support. It could take some time to stabilize, but yes, we are in a correction within an uptrend, and now we are retracing the fall to a short-term bounce.
Interesting. Let's get in Dharmesh Kant, independent market expert, joins us right now on the show. Dharmesh, good having you. Thanks so much for joining in. Seems like there isn't a day or there isn't a week which goes without a big move in either direction on the oil marketing companies. Today is no different. BP, HPRC, all three of them are trading deep in the red. what's happening here now? I mean, at what price or at what value would these stocks become attractive, if they become attractive at all?
Yeah, good afternoon. See, as far as downstream companies are concerned, all the refiners, I think it will take time. This quarter was an aberration for all of them because of the inventory gains which they had. Going forward, I mean, 2 quarters, they will be facing inventory losses definitely. So that is going to be there, and then these numbers will look very ugly. At the same time, you have a currency depreciation playing it out. The time to buy them now is, since these are all cyclicals, because see, the fact is very clear that pricing may come under a scanner by the government if crude prices rises beyond $73, $74. So I mean, that I'm talking about WTI, not the Brent. So if WTI goes above 73, 74, then they cannot pass it on to the consumer. So there's a limitation out there, and they have reached that level, that ceiling they are hitting now. So the time to look at them is when crude prices correct significantly to around 62, 56 to 62 kind of a dollar range. If that happens, 20% kind of a correction from current levels, then that is the quarter when you should be playing this cyclical trend. Not now, because the next quarter which will follow that, you will be again having inventory gains, and the first quarter which it will hit, it will be inventory loss, and then you will follow it up with an inventory gain. So it's more of an inventory gain kind of a play, and then the pricing and all will come into play. Not when it's trading at $70 to $75 band. Absolutely can avoid, no matter what number comes.
Dharmesh, with rupee on the verge of now breaching 70 mark to the dollar, any export-oriented theme or stock that you'll be looking at closely?
I think from trading perspective, 2 clear sectors are IT and pharma, where you will have some benefits playing out. That too, most of these companies have their hedges in place. So beyond that hedges, how much benefit will come? Maybe 100, 150 basis point if it goes away. Seeing what is happening in the currency segment with Turkey problem playing out. So yeah, definitely there's a trade out there, and apart from that, be it auto ancillary or a textile, should be avoided. They should not be touched from the export theme. The only 2 themes which can play out is IT stocks and pharma stocks. IT are trading at a good price level. I mean, valuations are already stretched and reaching the higher top. Pharma, still there is a scope to get. There's a value gap out there. Some 10-15% kind of an up move happens. Lot depends on what Sun Pharma is going to report its numbers tomorrow. So if Sun Pharma comes out with a good set of number with a positive guidance and the whole facility visibility on that, if all these things play out, then I think Sun Pharma, Window Pharma, Lupin, these one should be buying from a trading point of view.
Well, interesting trends there. What's done really well today, even if the markets have looked slightly off, and by the way, I must mark that we're down about 0.6% on the Nifty 50, and the Nifty Bank is down about 1%. But what's done well today over the last few days is GAIL. Gas Authority of India is the largest gainer on the index today, 3.5% higher, 376 currently. I think the 1-month chart will show that there have been sporadic moves on GAIL on the upside, which have been very, very strong as well. Today the volumes stood at about 10 million shares, but look at that, 1 month about 6%, sporadic up moves which have gotten sold into, starting a bit of a bounce. Dharmesh, do you look at, you mentioned about downstream, what about the gas-related companies and GAIL in particular?
I think all are good value-wise. If you remember, we had a talk about MGL way back when it was falling down sharply, and from those levels it has moved up 15-17%. But any such themes, be it MGL, IGL, GAIL, Petronet, LNG, has to be played out with a time horizon of at least 3 to 5 years. It cannot be a trading bet in your portfolio, and all these companies are going to do well. Margins may contract or expand a bit. I mean, 50 to 100 basis point, that cushion level you always have to keep, depending upon the sensitivity of the prices which is there because of socio-economic and political issues which plays out. Apart from that, it's a steady state kind of a business, long gestation kind of a business where you have some capital intensive deployment as well. So all these companies are competent enough to do that. So I mean, gasification is still at the beginning of its trajectory, if you look at India as a complete country, so miles and miles to go from here. So all this should be bought. But if you are looking for trading perspective, then as you rightly pointed out, last 1 month for GAIL has been very sporadic. So those kind of 3% up and then 5% down, it will keep on happening. So avoid that, buy it and forget it for at least 3 years. Definitely, 70-80% kind of return I see on all of them.
Okay. Stay on, Dharmesh. So much more to speak about, but it's 3:15 or just about 3:15, that time of the show wherein we should get a sense of what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Yatin, today you can start off.
And hopefully my graphics come in. In the dealing rooms, we have Fortis Healthcare. That is one stock which is buzzing in trade, decent volumes. Neeraj, 20 lakh shares traded there. Stock is quite active, almost 3% up for that one after quite some time. So finally some momentum coming in as far as this M&A candidate is concerned. Fortis Healthcare is something which is doing well in the trade. Reliance Capital, interestingly, we have Reliance Communications doing well in the trade. Other ADG stocks are probably not participating in the rally that we have seen in Reliance Communications, but dealers do indicate that domestic funds at lower levels are buyer in Reliance Capital at lower levels. So this is one stock which is on the dealer radar. Probably, they're expecting positive news bit as far as the entire Anil Ambani group is concerned. And Ricoh Auto, this is again the one auto ancillary. They have spoken about taking their top line to almost 2,000 crore levels in FY20 from the current 1,250. So, the management targets are quite, encouraging, at least for investors for the time being. Probably that is the reason why you're looking at a 5% pop which has come in on the back of HNI action. But Darshan has a few more stocks to talk about.
Yeah, so the all-important MSCI rejig will happen tonight and the results will be out tomorrow. What dealers do indicate that Page Industries probably will be included in the MSCI Global Index. The counter is doing up. It's up almost 1,000 rupees in today's trade on the anticipation of the inclusion. So we'll watch out for the official news later tonight. The second one is Tata Steel trading at the day's low. It's down almost 2%. The street seems to believe that Tata Steel will disappoint, at least on the operational side. So Tata Steel probably on the back of weak results is seeing a little bit of selling activity. And one stock which is seeing accumulation is Just Dial. It's up almost 2.5% in today's trade. Some of the notable HNIs are taking a bit of position in Just Dial on the back of some corporate announcement they expect. But nevertheless, it's moved up on decent volumes today. So Just Dial is the third stock.
Okay, we'll watch out for these names. Thanks a lot for that, Darshan as well as Yatin. Do watch out for almost all of these names in the session today. Actually, if I can just take a couple of those names into account and how they've done today. Can I ask about Sun TV to you, Sumeet Bagadia? What would you do here with Sun TV as a trade?
Sun TV has given a correction today and it's looking weak on charts. Looking at the chart, it seems that the stock can move lower and can touch levels of around 740 as an immediate target. And if 740 levels are taken away, then we can see a extended fall till 680 levels too. I think it's better to avoid long positions. Those who have taken sell positions at high levels, they can hold on the existing sell positions for the downside target of 740 as an immediate target. And if that is taken away, then we can see fall till 680 levels.
Okay, that's a sell coming in on Sun TV. The stock reacting to not so bad numbers actually for the quarter gone by. But Transport Corporation of India, I think that's gone up in today's session, and it's that's TCI. It's also touched its 52-week high in today's session. The volumes have been quite decent if I were to compare it at least to Friday's volume. Hemen, on the charts, 336.
Only TCI upward bar reversal coming in today. Yes, and volumes are pretty high. So, but it's a very interesting scenario. 1, 2, 3, 4, almost 12 to 14 months of a consolidation, Navneet. In terms of levels, 250 on the downside, 350 on the upside. And now we are, frankly speaking, on the cusp of breaking out upwards from here. So, very interesting looking scenario. A 12-month, 14-month breakout. Short-term positives, yes, but I have a feeling this might surprise on the medium to longer term also. Navneet.
Okay, TCI 9% higher right now, and PVR is the other one which has been in focus since the morning session after they announced their deal with SBI in the certain market. but the stock currently is at day's low, almost 2.5% lower. Dharmesh, what did you make of this deal announcement? In fact, Bloomberg Quint interacted with the CFO of the company, Mr. Nitin Sood, who categorically mentioned that the deal with SBI will be EPS accretive right from day one.
Again, sorry, I was unable to go through the details of the deal because of my, I was occupied in other work, so won't be able to comment as of now.
No problem, Dharmesh, but the street now will be watching out for Tata Steel's numbers. Any expectation, any numbers that you're factoring in?
See, numbers I think should be okay, but the problem with Tata Steel is the cross-currency kind of a hedging they do, and there are multiple cross-currency hedges which is being out there. So I think the only surprise which can come out on the Tata Steel numbers is the, on the currency front, what is the forex gain or loss they report. Other than that, it should be a decent 12-14% kind of a volume growth for the India business. And Europe, they should be able to, on a EBITDA level, they should be able to break even and stay in the black. I doubt in the European business they will be able to report a profitability. I mean, the PAT level black, it won't be there. So that will still linger on and haunt Tata Steel. And the problem with the entire metal space has been almost all the metal companies have reported good set of numbers, but the follow-up was not there in the market in buying them. And the reason for that is, the global economic turbulence which has started, and the uncertainty in the global market, the type of actions US has been taking day and every day something new is coming, some new sanctions are coming, and the market is becoming disruptive. So metal prices and the global economic growth, how is going to pan out as a global trade is very uncertain. It's more of an inward-looking trade which is happening as of now. So from that perspective, I do find all the metal companies, in spite of decent and excellent set of numbers for Q1, the stocks won't find upward price traction for at least 1 or 2 quarters. They will languish where they are.
Okay. Just before we get in closing strategies, want to mark what's happening to Jet Airways. There's a bit of a pullback in that stock. There is a clarification that the exchanges have sought on this report that came in the Economic Times about the stake sale to private equities. I don't know if that's the reason. That's just come out at about 1:30. No other news piece that has come out on Jet Airways. But the stock is up and active in the session today. If anything, with the rupee weakness, fuel prices will only get tougher. But there's a bit of a pullback that's happening there. I believe it's also in the F&O ban, Navneet, starting today's trade.
Yes.
So
I think it came out for Friday's session. Then after Friday's drop that we saw of 8 to 10%, it was back into the F&O ban for today's trade. And I think lastly what we're seeing, I was just checking the futures data, there is some unwinding, so which is suggesting that it's short covering rally also it could be.
Well, interesting. Slightly up and about. I don't think too many positions can be taken. But just before we take in closing strategies, yeah, that's the point I think that Navneet is trying to make. OI is down about 10%, so some bit of short covering one would reckon. But Hemen, what do the charts suggest?
Yeah, I think so. Dead cat bounce, and but yeah, I think as Navneet said, it's clearly a case of short covering. And frankly speaking, Neeraj, 880 and 260 is virtually fallen off a cliff. Even if a meager bounce comes in, I think we could be heading towards 300 or more. So, clear case of short covering.
Okay, let's get in closing strategies. Sumeet, to you first.
Well, I think from here on there is a possibility that we might see a move in pharma stocks. I think pharma stocks are looking good to me, and from here on, one can initiate long positions in Sun Pharma. It's currently quoting at around 563, 564 levels. One can initiate long positions in Sun Pharma at the current market price, with the stop loss to be placed at 550 levels on lower side. And on higher side, once the stock is able to break 570 on closing basis, then we can see a move till 590 levels in next couple of days. So I think one can initiate long positions with the street stop loss to be placed at 550 levels.
Okay. Hemen, what about you?
BTST on Mindtree, STBT on PVR.
Okay, 2 closing strategies coming from Hemen. Mindtree, BTST and STBT on PVR, which we just highlighted, is at day's low. I think the oil marketing companies have corrected even further. BPCL is now sitting with cuts of nearly 6% and HPCL is sitting with cuts of almost 5%. I just want to quickly address a couple of viewer queries. I mean, one of our viewers wanted you to do a chart check on ITC.
ITC?
Yeah.
Unfortunately, the time frame isn't mentioned. So if it's a positional call, I think ITC is moving towards 325 or so. The only area, the worry, if any, is that we could dip once to 296. Now, will it dip or not? I'm not sure. We've given a one-year breakout. Outlook is positive. Rounding bottoms, indicated support above moving averages. About 308, 325, 328 possible. Once again, like I said, maybe a dip till 296. But even if it dips till 296, the picture doesn't change. We are heading to a 325.
Okay, those are the levels, by the way, to watch out on ITC, as Hemen highlighted. But one more query on Minda Industries. Sonder has written to us on YouTube. He's been holding the shares since at the price. He bought it at 269. He has a long-term view, and he wants to know if he should look to accumulate more current levels. Definitely sitting on some amount of good profits. But Dharmesh, do you track Minda Industries? If yes, what is the fundamental view here?
No, Navneet, again, I don't track it very actively, so won't be able to comment on that.
Okay, no problem, Dharmesh. I'll just take a quick technical view. Sumeet, on the charts at 404, would you advise somebody to buy more?
Well, the stock is has given a continuous upside move, and it's an uptrend. So those who have taken long positions, they can hold on the existing long positions. Immediately, the support for the stock is placed at around 200 DMA levels, that is approximately around 385, 390 levels. That means till the time these levels are not taken away, it's better to hold on the existing long positions. And if anyone wants to initiate or average at these levels, then they can go ahead and buy at CMP, because from here on, if the stock is able to manage 410 levels, if a stock is able to break 410 levels on higher side, then we will see a move till 440, 450 levels. So I think we can see this move in next couple of weeks. One can hold on the existing long positions.
Okay, Dharmesh, before we let you go, any top idea for our viewers?
Yeah, I think one should be again acclimating, auto ancillary stock like Bharat Forge, which has Motherson Sony. These are the areas which looks attractive, and pharma stocks is a trading place. So Sun Pharma would be the top bet out there playing. Apart from that, as the last interaction I suggested that market will take a breather. I think this breather was long due. So one more week, if some good correction comes and we get 10-15% lower quality stocks, so we'll be buying out there. And areas will remain the same. It will be the same cyclicals, private sector, banks, metals, cement materials, automobiles and auto ancillaries pocket. That's it. Thank you.
All right, Dharmesh, thanks a lot for joining us today and taking us through your views on the markets. Have a good day, Dharmesh. Okay, just 3 minutes to go for markets to close. Let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, second straight day of losses, but I guess this is on back of the currency rout that we're seeing in the emerging market basket.
Yeah, but honestly, not as bad as I would have thought at the start of the trading day today. So, I would believe this is not actually that bad a close. Yes, we are off the highs of the day. We did pull back quite substantially, only to fall back again. Similarly, for the stayed this way for most part of the trading day, but it's not as bad. The mid caps and the small caps will tell you the picture that it's not that bad. Actually, I take back my words. In the last 1 hour, the mid caps and the small cap index in particular has cracked quite strongly. So making the market breadth in the last 45 minutes of trade has actually become fairly somber. Because when we started the show, the mid caps and the small caps looked fairly intact. So the last 45 minutes, 1 hour have been slightly worse. Let me line up what's happening in the large cap space, and then Navneet will bring you up to speed with all that's happening otherwise. On the gaining side, GAIL and the IT pack, there's not much to talk about. TechM, HCL Tech, Infosys, Wipro, it's IT which has held the market higher in the session today, or helped the markets hold fort just about 0.5% gut because of what's happening to IT. But what about the losers? The rupee weakness weighing in on the oil marketing companies. So BP, HP, IOC, all three down. Yes Bank slides lower, SBI slides lower. That's the concern. On Friday's session, in the last 45 minutes, about 3% gone, another 3% today. And then a couple of others like ONGC, etc. have corrected, but nothing too much. It's got to do with what's happening to OMCs and the banking space, which has led the index lower in the session today. But mid caps and small caps now meet, and the last 1 hour, a stark difference from the rest of the day.
Yeah, I think for majority of the session, they were outperforming the benchmarks, but they also succumbed to selling pressure. Let me just take you through a couple of stocks which were in focus. I'm going to start off with the gainers. Apollo Hospitals hospitals. The numbers came in on Friday during market hours, but the move, Mark, you came in today's session, 13% higher for Apollo Hospital, closing almost at day's high. TCI, that's Transport Corporation of India, that had a good session, 9% higher for this one and closing around the levels of almost 335. United Breweries also came out with the numbers on Friday, but the move came in today, 7.5%. I think the commentary from the management was quite strong, but I think what Neeraj was highlighting about the gross margins and the expansion in EBITDA margins that one has seen may not continue in the coming quarters. Firstsource Solutions also had a good day. In fact, the entire IT pack was buzzing today, 6.5% higher for this one. PC Jewelers, third or fourth straight day of gains. The numbers came in on Friday, and the stock has seen a bit of bounce back, now trading above the mark of 100. And also Sonata Software, that too went up in today's trading session. The closing came in 4% higher for this one. On the losing side, you had Vakrangi, which saw cuts of nearly 20% coming about today. And besides Vakrangi, you also had Bajaj Electricals. The stock reacted to the demise of its MD, 8% lower for this one. Sun TV, despite of good numbers or not so weak numbers, but there was immense selling pressure seen, fresh shorts for this one. And also the other South-based company, India Cements, reacting to the numbers, fresh short positions seen for all these, for both these counters closing at day's low. NBCC also didn't have a great day today, actually. That saw selling pressure. NBCC closing with cuts of 5.5%. And also something like Shriram Transport, which was till now doing pretty well. The numbers were not so bad, but I think in today's session there was a bit of profit booking with markets falling for Shriram Transport, which is closing the day around the levels of 13-14 Neeraj.
Yeah, so all in all, a weak afternoon of trade. I want to bring up the intraday of the mid caps and the small cap indices, and then the market breadth first before we do anything else. The intraday is, and I think the slide perceptibly here, somewhere around 230 to 330 onwards, the deep gashes that came in the mid cap space and the small cap index in particular, which really came off quite rapidly, about 1% lower, the small cap index too, and the market breadth would, I guess, would have turned adverse towards the last 1.5 hours of trade. Well, was bad. The gap only yawning more underneath towards the close. So 1:2 in favor of the declines.
Yep, and market breadth was definitely weak for the day, but let's check the participation. How was that starting this new week? The cash turnover has gone below the mark of 30,000. I think on Friday we did see higher turnover from both the exchanges, but on the NSE F&O side, it's definitely above the average turnover that you get to see. So 6.7 lakh crore, the total turnover for the day above the 7 lakh crore mark.
And would it be IT and GAIL maybe? Bring up the contributors list. I would reckon IT and GAIL.
Yeah.
Actually, no, Sun Pharma and ITC2 out there. But yeah, Infosys top of the pile. But look at the other side underneath. The heaviest names, all of them putting pressure today.
Yes, HDFC Twins, State Bank, Reliance Industries, all of them, and these are all heavyweights. I think some support came in from Infi because IT was one of the sectoral gainers for the day, giving some support to the market. Sun Pharma, Neeraj, will be in focus tomorrow ahead of the numbers, I guess now.
Yeah, yes, up and about. Let's see if that lasts or no. Interestingly, no MCs because of the low weightage making it to the list, but combined, they would have lost quite a bit as well. Anyways, final thoughts from our experts. Sumeet Bagadia, to you first. What levels on the Nifty Bank would you now envisage as the close has been rather weak today? How much further?
Yeah, yes, the closing is weak, but the overall structure is positive in Bank Nifty. Downside, it has support at around 27,700, 27,500 levels. At the same time, on higher side, it is resistance at around 27,900, 20,000 levels. Once we get clear convincing breakout about 20,000 levels, we will again see a move till 28,500 levels. I think if we see any dip from present levels, then that should be used as a buying opportunity. Till that time, supports are not taken away, it's better to be on long side. I think in next couple of days, we will again see upside move, and on high side, we can see levels of around 28,300, 28,500 levels. I think dips in Bank Nifty should be used as buying opportunity.
Okay, let's see whether this turns out to be true or not, and whether there's any sort of recovery which is seen in the markets for tomorrow's session. But I mean, how would you approach the trade on Tuesday?
I think there's this Nifty gap on the Nifty spot. There's a gap on the Nifty spot, Navneet, and a gap on the Bank Nifty. So, which one is negative? 2 is going to provide resistance. But the Nifty made an attempt to fulfill this gap. The Bank Nifty hasn't done that. A small unexplained bounce tomorrow cannot be ruled out. If that comes in, I'd short that for another 80-point decline on the Nifty. So I'd wait for a small recovery, or if Nifty breaks 11,340 tomorrow in spot, I'd keep that as a stop loss and go short.
Okay, that's the technical view coming in for tomorrow's session as well from our experts, Sumeet as well as Hemen. Thanks a lot for joining us today and taking us through your views on the markets. Well, Neeraj, with that, it could be a wrap on equities, but I guess the focus continues with currency market, and we are inching very closer to the mark of 70 to the dollar.
Yep, and for all travelers, it's bad news, but well, let's wait and watch how much further it deepens, or whether Bhaskar Panna's thoughts turn out to be true. But from Navneet and me and the team that put this show together, thank you so much for watching.